The weakness is expected to continue into the U.S. According to futures. But what you're saying here is don't be afraid of this sell down. What are you making of all the weakness and what's happening in the markets today?
Emily, good to see you. And that's exactly right. I don't think this is something right now that investors need to be that concerned about. As a long-term investor, when I look at the totality of the data, to steal a word from Powell at the press conference, when you look at everything that we have in front of us, I don't think there's any conclusive evidence that's showing that the U.S. economy is rapidly slipping into a recession or that the narrative has shifted rapidly. We know the economy is normalizing. We know that the jobs and labor market is starting to slow down. But all of this still fits within the context of an economy that's doing good enough, that's going to slow down, but where cracks aren't opening up to fissures. Asset prices are still supportive. Fiscal policy just 2 weeks ago we were worried could be inflationary. And so there's still tailwinds from that. And companies are able to withstand the overall tighter rate environment that we've been in. And I think investors generally are overlooking what has been a very strong earnings season. Corporate earnings growth across the S&P 500 is in double-digit territories and greatly exceeding that of expectations. So I think investors should be thinking about getting their shopping lists ready and looking for opportunities, because a lot of good quality assets have just been thrown out with the bathwater over the past few days. And I'm definitely sniffing around for where I can start to add more exposure or increase exposure going forward.
So buying on those dips, so I have to ask, are there any sectors, any companies that are looking good to you? What do you think of the mega cap, the tech plays?
So that's a really interesting question, because if you do actually think that the economy is slowing or you're concerned about recession risk, a number of the mega cap companies fit the bill for defensive profiles that you want to be invested in. Cloud growth, a lot of the mega secular growth trends that are supporting the earnings growth for a lot of these large names like Microsoft's, Alphabet's, Apple's, those are still very much in play. I think expectations may have gotten ahead of themselves, and so some of the weakness we have seen has been just a little bit of resetting or shaking out of weak hands or performance chasers in the market. But these remain very, very solid businesses. So I would look to some of those to maybe pick up, given a lot of the weakness that we've seen. But healthcare is finally starting to perform well. You've seen a lot of names like United Healthcare, for example, that investors just haven't liked despite beat and raise after beat and raise after beat and raise. And finally, you're seeing strength there. So I think certain HMOs that have continued to perform well have defensive growth characteristics. That looks very interesting. And I've been overweight India for a long time, and I think India provides a nice complement to overall global portfolios because it's been underinvested in by many investors for quite a long time. But the growth story there from an economic perspective is, I think, very independent of a lot of the issues that investors are questioning with respect to the global economy or perhaps the U.S. economy. And you're seeing good earnings results there too. So I think some of the weakness we're seeing maybe today or over the past couple of days, that can certainly be a buying opportunity as well. So I would look to be building in some diversification to portfolios when we're given the opportunity for weakness, because we haven't had that many bites at the apple over the past few months. So we should certainly take advantage of that going forward.